Hello everyone, my name is Siddarth Shetty and I welcome you all for the second episode on the basics of the stock market. So in the first episode, we had discussed on the basics of the market and how we can buy and sell shares based on the two types of the analysis, that is the fundamental analysis and the technical analysis. So in this episode, we'll be understanding how practically we can do the buying and the selling of the shares or in general trading. So let's get started. So in order to do this, we need two things. The first one is the demat account and the second one is the stable internet connection. Alright, now before we get to the demat, how it works, what is the demat, all those things, let us understand why demat came into existence. Few years back, when someone wanted to buy or sell shares, there were a lot of process and time involved. After T plus 30 days of settlement, again I'll come back to what is T plus 30 days a bit later, a investor would get a small sheet of paper which consists of the details like name, quantity, date, face value, the price of the share, all those things. So this piece of paper is nothing but the share certificate. So after demat came into existence, the process is much simplified for investors and traders, and this saves a lot of time. So basically a person having a demat and a stable internet can do trading sitting in any part of the world. The main advantage of having a demat account is that demat account takes T plus 2 transaction. So T plus 2 transaction is nothing but, say for example, you brought a share of any company on Monday. So today is Monday. So Monday becomes your T. So that is the traded day. And 2 days becomes the settlement day. So that is nothing but Tuesday and Wednesday. So on Thursday, your shares will be reflected in your demat account in holdings section. Whereas in olden days, if you see, it was T plus 30 days. So now you'll get this better. So imagine this is May 1. So on May 1, you brought a share of a company, and that too you have to undergo all the physical process. You have to go to the office, all those things. So on May 1, you brought the shares. Can you guess when will the shares, you'll be getting that share certificate? So it will be exactly 1 month later. So May 1 will be the T day and 30 days after you would get your share certificate. So the days that are mentioned, for the settlement, say like for example T plus 30 or T plus 2, they all are during the market hours only. So if that, in middle, if there is any government holiday, then that day again will not be considered. So in total, if you see, this would take a hell lot of time and the process was too slow. But with the help of the demat, after the demat existence, the process has been very much simplified, and a person sitting in any corner of a world can trade with a demat and by having a stable internet connection. So that becomes a very good advantages for a fast trading. So I would like to explain this with an example. So demat account is just like a Paytm wallet. So what you do here is you initially add some funds. So for this example, let's say you add 10,000 rupees from a bank account to your demat account. So once the fund gets reflected, you can start buying and selling the shares. And one more major question that most of the new traders or new investors have is there any stipulated amount or is there any fixed amount we need to start trading? Then the answer is no. You can start trading from 500 rupees up to 5 crores. So there is no limit for anybody to start trading. Now to add funds, you do not have to go to the bank and wait for the process. You can do it online through UPI, maybe in Google Pay, Beam, etc. Alright, now let us understand the market participant, those who participate during the trading hours. So basically there are three participants. The first one is the retailers like me and you. We come under retailers. The second one is the high net worth investors. Now the name itself says high net worth. So if I give you examples like people like Ambani, Gautam Adani, Radhakrishnan Dhamani. So these people have their portfolio in crores. Now the third type of participant that we get to see, the most important one, is the institutional investors. So under institutional investors, there are basically two types. The first one is the foreign institutional investor and the second one is the domestic institutional investors. So these two institutional investors become very important aspect for the movement of the price in day-to-day market. So if institutional investors decide to sell the market or short the market, then that day the market will be down. No matter how strong the retailers or the high net worth investors come together, these people have more power when compared to the retailers and the high net worth investors. So if I give you examples for domestic investors, so domestic investors consist of mutual funds or Aditya Birla, who have the transaction in thousands of crores. That's why the market moves in their direction. The foreign institutional investors are nothing but the companies from abroad invest in our country, in Indian stock market. Alright, before we finish off this video, I would like to give a glimpse on trading, or rather say technical analysis. So trading can be further or can be basically classified into four quadrants, just like how we have in mathematics. So if I take you all to the screen, so the first quadrant is the technicals. Now, it's obvious that if you have to master technical analysis, the core part of technical analysis will be the technicals. So you need to be strong initially. You have to improve your skills on technicals like the chart patterns. You should be easily able to spot chart patterns whenever you see, a valid pattern. So that comes under the first quadrant of technicals. The second quadrant is risk management. Now, let's say you're very good with technicals. You're in a position where you can, predict the market direction. Say from this price the market is going up, and from this price the market will go down. You're good with technicals, all right. But imagine something goes ugly, and the market starts going in your opposite direction. So if you're not able to manage your risk, then you can end up blowing your account in a single day. So that's why having a proper knowledge on risk management is very important. So that comes under second quadrant. Now the third quadrant is psychology. Now you might be wondering, why psychology? How is psychology even related to trading? All right. Now for a new trader who entered a market might be facing this problem. As soon as you enter a trade, the profit starts running, and even at small profit you get excited. Looking at those profits, you feel like, okay, let me quit this trade, I'm done for this day. All those kinds of things come to your mind. Or in, say for example, in case 2, you entered a trade and the trade goes against you, and you see the negative numbers, and these negative numbers start making you scary. They make you get anxious about the things, and you take some random decision. You add more quantities, you double the quantity in your losing trade. So all these things happen when you enter a trade. So in order to be stable or to take good decision, you need to have a very good psychology on market as well. So having a good psychology can make you stand more ahead than being good with only technicals. All right. Now the third quadrant is life management skills. Now, what are these life management skills and why do they need them? In order for you to be patient during the market hours, you need some practice. You need to be trained. So we get trained with the help of life management skill. The first life management skill which I'm going to present to you all is reading. Stock market is a very vast field, and market is always supreme, and every day is a new learning basically. So the more you have knowledge, the better you perform in the stock market. I believe reading books is one of the best way you can get knowledge than social media. All right. The second life management skill is the meditation. Why meditation? It's because in order for you to do good in trading, have you heard that you need to have very good patience in trading? So Warren Buffett himself says that investing or trading is nothing but the transfer of money from impatient to patient. So with meditation, you can improve your patience, and I believe this will give a lot of good impact on a trader's life. The third life management skill is workout or daily exercises. Now, why do we need to work out? Is it really necessary? Let me give you an example. Now, you are very good with technicals. You are able to spot the price action, all those things, and you are very good in risk management. You are even good with psychology. But for your body to respond quickly, do you think you need to be fit? You need to be healthy? Yes. So for that sake, we need to have a basic routine where we give ourselves a bit of time in doing some cardio exercises. It may be it may be gymming, or it may be morning walk, jog, all those things. Ultimately you have to be fit physically.
Okay, now let us understand the internal structure of trading while we buy and sell shares. So imagine you want to buy 20 shares at 500 rupees per share. So how much capital do you need in your demat account? So it's nothing but 20 into 500. So you need to have 10,000 rupees in your demat account. Now for this example, let's say that your demat account is of Zerodha. So when you put buy order on Zerodha, this order will be bypassed to Zerodha company, and from Zerodha this order is again passed over to NSE or BSE. Now what NSE or BSE does is it finds for a seller of your specification. Now it's just a reverse process of what a buyer does. Now there will be a seller who will be selling the same requirements, and when NSE meets the requirements, the share gets swapped from seller to buyer. So the buyer who wanted to buy that specification of shares will get the shares in return. Okay, so now you might be wondering, how does NSE, BSE or your broker, like for this example, we have taken Zerodha as our broker, make money? So it's simple. NSE will take a small fees from Zerodha, and Zerodha in return will take a small fees from us. So this is called brokerage charge. So that's the charge which we pay once the buy order or a sell order is executed. Now, if at all you want to open demat account, then I highly recommend Zerodha, since it's very user friendly. They offer low brokerage and it's very good for overall fast trading.
Alright, that's it guys for this video. So I hope this video was beneficiary to you. So if you like the content that is coming up on this channel, then please subscribe to this channel, and also follow Trending Bulls Academy on Instagram. We'll be posting regular analysis and updates related to stock market. So I'll see you in the next one, and once again thank you so much for watching this video.